Today's webcast is brought to you by Safeguard Properties. The U.S. Department of Treasury intends to recover more TARP investment funds, and home price gains slow down in June. Ahead on Friday's News Wrap. The U.S. Department of the Treasury announced that it plans to continue selling its shares of common stock in Ally Financial, which will further reduce the government's stake in the Detroit-based auto lender and recover more TARP investment funds for taxpayers. Treasury now holds 75 million shares of Ally common stock, which computes to about 16%. Treasury began selling off its common stock in Ally back in April when Ally's initial public offering price of $25 per share resulted in the sale of 95 million shares that netted almost $2.4 billion in proceeds for taxpayers. Following the sale of those 95 million shares in April, IPO underwriters later elected to buy an additional 7.24 million shares of Ally common stock at the IPO price of $25 per share, which recovered taxpayers another $181 million. To date, about $17.8 billion of the government's original investment through TARP to assist Ally has been recovered for taxpayers, which is approximately $650 million more than the original $17.2 billion investment. Taxpayers have recovered a total of $439.8 billion from TARP investments to date. According to the latest residential price index report from FNC, home prices are still on the way up. FNC found that despite continued signs of leveling off in home price appreciation, U.S. home prices were up another 0.8% from May to June and 2.3% throughout the second quarter. According to FNC, whose data excludes distressed properties, year-over-year growth is decelerating as expected. The rate of growth in price appreciation is down to 8%. In February, the rate was at 9.4%. You can check out these stories and all the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Monday. Until then, stay with DSNews.com for all of your most relevant default servicing news.